Hey guys, welcome back. Patrick here. Obviously, the market is still very jittery and there's a lot of uncertainty, but guess what? I'm sticking to my strategy and I'm building my portfolio now for the next 5 years. So today I've been adding a little bit more, as I have pretty much every day for the past few weeks. And in this video, I'm going to show you some of the companies that I've been looking into and the ones that I already added. I'm going to tell you what my strategy is and the reasoning behind it. So I'm going to cover gambling, EVs, space, and tech stocks, maybe a couple other that are more miscellaneous. And hopefully that helps you, right? I'm going to show you the numbers I'm looking at. So let's get started. But first, please do like and subscribe. And also, if you haven't done so yet, how could you not have done so yet? I mean, please get your $50 from SoFi, either through their money account or the investment account. Links are in the description and in the comments. Alright guys, let's start with the electric vehicle companies. I know a lot of you have positions in it. So recently I made this video where I ranked all of the EV SPACs, and someone asked me a great question: do I have a position in all of the ones I consider must-haves? And the answer is not yet. It's pretty obvious why, right? They've been in a constant downtrend for the past 3-4 months, and they're literally losing, in a lot of cases, like 8-10% per day. So right now I do have exposure to many of them. I just can't be buying more of them right this second, right? So I do have a position in Lightning Motors. That's one that I had bought warrants, sold the warrants, then I bought back cheaper, and they're still going down. Right now they're at 110. So Lightning Motors, currently they're almost giving the company away. It is pretty ridiculous how badly this company has been beaten down, and still it continues dropping every day. So right now with this one, I'm waiting until they're going to give us the earnings and also the guidance for the rest of the year. I feel like this company is very cheap, right? So when you're at a $500 or $600 million valuation, you don't need to do a lot of sales for the company to be worth it and eventually go up, right? So the company can go up to 1 billion, 2 billion over the next couple of years. And at these prices, the risk versus reward, in my opinion, is really good. So this is one that I'm tracking. I already have warrants, but I'm going to wait until they tell us the earnings and if they can deliver on the $63 million in revenues for this year. If they do, then I might be interested in actually buying shares rather than warrants. And the reason for that is, I don't know if you guys have done the calculation, but currently even at 110, the break even for the warrants is $12.60, right? So yes, if it reaches 15 bucks over the next 5 years, it's going to be a pretty good gain. You're going to make like 300% profit or something like that. However, at $6, right, the company needs to more than double to achieve that. So at $6, I feel like the shares are starting to become much more interesting, especially if it keeps going down. Then I can actually start selling covered calls on it like I do on all of my positions. All right, second company is Lion Electric. This is another one that's been on a downtrend since 35 bucks. So this is the type of company that it's very difficult to open one right now. All right, so what happened is I originally sold my warrants when the share price had reached $32, but when it started to go down, I did buy some warrants, right? So now I'm kind of stuck with it. I don't want to really dollar cost average down yet until this stops going down. So this is the type of company, right? It lost another 652 today, and look at the warrants down 12%. That's not the right time to add more to your positions. You don't want to try to catch the falling knife. We're going to need to see that, that bottoming out, and then after that, maybe I'll be adding more to this one. But this is the type of company that you guys know I really like. I think they're going to do great in the future, but for now, they're getting beat up so much that I'm not adding quite yet. Next one is CCIV, Lucid. The share price at this stage is starting to become very interesting. So when the share price had gone from $40 to the low 30s, and Portnoy had started buying it and he was talking about it with his followers, we could see a little bit of an incline. So I had bought a couple hundred warrants, but nothing too big, and then I sold them when it started to crash once again. I mean, I never thought that we would see the stock under $20, let's be totally honest. So now at $17, it's starting to become much more interesting. It's not dropping quite as fast as the other ones, but it is still in a fairly big downtrend, right? So that's another stock that I'm going to have to wait until it actually starts to stabilize. I mean, probably at 15 bucks, like the actual pipe investors, I feel like at 15 bucks, I'm going to be buying a lot more. In the meantime, I'm going to be maybe nibbling a little bit, right, if we have more down days, but I don't want to open a big position like $25,000 in this stock while it's still going down, along with the rest of my portfolio. All right, next up, let's look at gambling stocks. And here I'm looking at 3 of them, one of which is very new. It is Win Interactive that just announced a merger with Austerlitz. So this one, we don't know a lot about it quite yet, right? So this is more of a long-term project. I'm going to have to get more details about the company over the next 6 months. But the other 2 companies is, of course, MGM, which I have one of my biggest positions in, and the other company is DraftKings, which I've talked about many times before. Let's take a quick look at them. So all of them have been kind of struggling. MGM had been doing really well for the first 3 months of the year, but now, you know, kind of like with the rest of the market, it's been kind of hurting in the past couple of days. But very interesting with this company, right? If we zoom in, it's been struggling over the past couple of days, but this is a company that I've been selling a lot of covered calls on. And right now, if you guys listen to the conference call recently, they're buying shares back currently. So this is one of the stocks that I have absolutely like no stress about or anything. They're buying shares in $37.50 range. So today it dropped under $37 for a brief instant, and now it popped back to over $37, right? So it's actually green for the day. So with this company, again, like I'm not really concerned because I know for a fact that in the next 5 years, they are going to keep ramping up their revenues. So you have, of course, the casinos, but you also have BetMGM, which is doing really well. So the analysts consider that the company is worth about $40 with the casinos and about like 12 bucks for BetMGM right now. So the price target is a little over $50. So this one, again, doesn't give me a lot of stress. Right now, I didn't buy it today, which was probably a mistake, but if it drops under $37, I'm probably going to add a couple hundred more shares, right? So I already have a big position in this company, but at these prices with the management that's really defending the stock, right? So they're buying back shares and they are going to give a dividend in the future. I feel very, very confident about this one. So DraftKings is very different, right? This is a company that I liked when it was in low 40s back in December, and it had a massive run since then, but it literally lost everything it had gained. I mean, this is one of the companies that's been getting crushed the most, and they recently had their earnings, and the company is just losing so much money, right? They spend hundreds of millions of dollars in advertisement. So yes, they're getting a big market share, and maybe in the future it's going to be fruitful, but in the short term, as a shareholder in this market, it is a little scary, right? I never thought that we would see this stock back under $40, which right now it's at $40.99. So if we do see it under $40, like especially if it reaches 35, I want to add more to my position. My goal with this company would be to have 1,000 shares, and after that, I'm never going to touch it again, right? It's just a long-term project. This company, I feel, has a lot of potential because of the millions of users that they have currently. They increase their projections and everything. So there's a lot going for this stock, but right now, like the EVs, it's been in a big downtrend and it is fairly risky. But if it reaches under 40, I feel like the risk is worth it because Wall Street loves this stock. And eventually, when the market recovers, all of these growth stocks, this is one of the stocks that's going to go back to 60 plus. Now, if we look at the space industry, there's only one company in my portfolio, and that is Rocket Lab. Since SpaceX is not available as an investment, I feel like the only company that is worth it is Rocket Lab. They're ahead of everyone else. They have the biggest total addressable market in the future. You know, they've already proven their technology and all of that. So, however, with that said, the share price is dropping constantly, and this one is under $10 right now. So we have that protection from the money that they have in trust. At this rate, it's almost likely that I'm going to have to redeem my shares before the merger. So I'm still going to vote yes for the merger, but I might have to get my money back. So for a very, very small loss in this one, because I bought it very close to $10. Now, If we look at the industry as a whole, though, I do feel like space is going to be very good in the future, especially a company like this. But the problem is it is very, very early, right? So this is the type of industry that the shares are going to do really well in an up market, but in a down market like this, I mean, we can't see any traction even for the highest quality companies like this one. So their next mission is very soon, running out of toes, interesting name. So, you know, it's going to be later on this month. I don't really think that it's going to actually help the company. In fact, it's kind of like, if the mission succeeds, it's not going to help the company. If the mission doesn't succeed and for some reason the rocket explodes, it's going to hurt the company. So it's kind of like a no-win situation with this one. That is very, very unfortunate, right? But that is my assessment of the current situation with space companies and Rocket Lab. So at this point, this is the type of company that I might redeem my shares, and then it's probably going to drop for some reason, right? There's just no buyers for these types of companies right now. And then I would be very, very interested in buying back into this one after the merger, because I do believe in this company. This is one of my more conviction play long term. But again, like when you know the price is going to drop, your responsible thing to do as an investor is to act on it. Okay, if we move on to the tech stocks, the two that I've talked about on the channel before are AMD and Facebook. I'm still very interested in both of those companies. I have them in my portfolio and I do want to add more. So AMD is a special case. I opened it last week and it's not been performing well at all so far. Like there's no denying that. So I opened it at 78 bucks and since then it's just been losing a couple dollars per day. So the big support was at 74, right? And that was kind of like my backup, what I was relying on, because it had hit it multiple times and rebounded each time. So I figured, hey, I'm buying at 78, I'm going to be selling covered calls, and if it goes back to 74, then I'm going to buy more into it and dollar cost average down. But the fact that it dropped under 74 today is a very, very bearish sign in this case. And if this was a short-term momentum play, I would have cut it already, right? When you do those types of strategies, it's kind of like a binary choice. Either you're right and it's going up and you're making profits, or you made a mistake, it's going down and you want to cut your loss as soon as possible and move on to the next stock. That's how I play the short-term momentum plays. However, with AMD, since for me it's more of a conviction play for the next year or two and then possibly up to 5 years, I'm giving it a little bit more leeway. In my opinion, it's not really a matter of if they're going to recover, it's more a matter of when they're going to recover and at what price, because they just show so much strength in the earnings that I do think that they're going to crush it for the next year, right? So this is the type of company that I'm going to give it a little bit more leeway. I bought more shares this morning at $73, lowered my cost basis a little bit, and if it drops more, I'm going to be buying more and more of this one, right? So this is the one that I hope it doesn't go back to 50 bucks. That would really suck, but the lower it drops, the better the opportunity. So I'm personally willing to like take a little gamble on this one, right? So we'll see what happens with it, but that's how I'm playing it. It sucks that it's under 74 bucks, but I feel like this one, right, is going to recover. It's just a matter of when. Like when you have all the analysts that have a price target over 110, you know, that gives you a little bit of cushion, especially when you can sell covered calls on this one and get pretty good premium. And I've already rolled down, so I got my premium twice this week already. All right, so the next one is Facebook. This one has peaked at 330, and I love this company. I mean, to me, this is more of a long-term wealth builder. It's not the type of company that you're going to double your money in the next year or anything, but it is a nice like cornerstone of someone's portfolio that you can kind of depend on for long term. Like the odds of like you wake up in 5 years and you're down 80% with Facebook is literally almost 0%. Now, we can't use the word guarantee or anything, you guys know that, but you know, there's almost no chance of losing long term with this stock because they're so profitable. They're just banking billions and billions of dollars, right? So they peaked at 330 after the earnings. Now they're retracing back to the low 300s. I bought more. The latest time that I bought was at 260, somewhere around here. And I felt like I made a pretty good deal. I put it in the community post if you guys are following them. But if it goes back under 300, I'm going to look into it more. But I wouldn't want to go too deep at 300. But if it goes to 280 or less, or like anywhere in this range, like 260, I'm going to be buying a lot more of this one. Like it's the type of cornerstone to your portfolio that you can sleep at night and you know that over time it's going to keep going back up. So whether you like Zuckerberg or not, or Facebook, because they're always in news, often it's negative, but overall, they have a proven track record of being successful and generating a lot of revenues and profits, and as a shareholder, that's what we want. So I'm going to be buying more if the share price keeps dropping. Again, preferably 260, 280, right? And of course, as usual, the lower it goes, the more I'm going to be buying. So this is kind of like our second chance in the market. Everyone that's missed the run up last year or wanted to like invest more, but they didn't have the money at the time and everything. Well, right now we have that chance once again. So it's companies like these. Alright guys, before I wrap up the video, let's talk about two more companies, Tattooed Chef, TTCF, and IPOE SoFi. I know a lot of you have it in your portfolio, and I've been adding a lot more to Tattooed Chef since it went under $18. But now I feel like I have a pretty decent position. I might add more if it keeps dropping, because this is yet another stock that has been on a downtrend. Now, it seems like it's kind of finding its footing. I don't see a lot more drop for this company, right? It feels like it keeps bouncing between 16, 18, somewhere around that, right? So if it drops way under that, maybe I'll add more like in the 15s or 14s or something like that. But I don't sense that we're going to have a lot of movement from here for now. So they had their earnings yesterday, and I strongly encourage you guys to listen to the calls, right? I don't care if it's this company or another one, right? Whichever company you like, follow the calls, because when you listen to the CEO, it's very different from just reading the press release. So they had their earnings, the press release, right? They do beat the revenues, so that is good. But you know, overall, it wasn't like that extraordinary. But when you listen to the CEO, I felt like it was very, very encouraging. And I feel like this is one of the sneaky plays, because I feel like the rest of the year and next year, they're really going to beat their the projections by a lot, right? So one of the analysts was really pressing the CEO on his forward guidance for the rest of the year, and they were so defensive about it, right? They did not want to commit themselves to raising the guidance, because then if it didn't pan out, like the company that they're buying right now, and if they don't come online super quickly, you know, one of the factories might come online and start generating revenues in the fourth quarter, but maybe it's going to be in the first quarter of next year. There's going to be some expenses and all of that. So they're not exactly sure what the guidance is going to be. So they were super, super cautious about it, right? So that doesn't reflect in the press release. So there's not a lot of people out there that are familiar with the company and know that it's going to probably way outperform what we would expect with the numbers and the projections that the analysts have right now. So that's why I'm not buying today, but if it keeps dropping a little bit more, especially under 16, I'm going to dollar cost average down. And I do think that in the next year or two, this is one of the companies that's going to do really well. Again, it's not the type of company that you're going to maybe become a millionaire instantly. It's not Dogecoin. It's not that exciting, but it is going to be a nice steady growth over the next few years, right? I like that company that's going to have like that stair step over time, or a nice gradual increase, not just super high roller coasters. And this fits the bill for me. So the last company is going to be IPOE SoFi, another company that I have a decent amount of position in. But if you guys remember, I had sold a little bit of my position because of the 30% short. So since then, it has been dropping. So I did save a little bit of money by selling, right? And this is a company that I'm going to wait until after the merger, like maybe 30 days after, when we have all the drama with the warrants. We're going to see what happens with it. Like, let people short it, let them manipulate the stock. Eventually they're going to go long on it, and then I'm going to be pouncing, right? So, but for now, I'm not going to be buying more quite yet. I don't know, like, what's the floor for this one, right? Because again, when you look at the chart, you don't have a big history behind it. It's very difficult for us to really plan what's going to happen. One of the big problems with these SPACs especially is that the shareholder base is all like retail investors. So the retail investors are really fickle. So we've seen them, like, often they buy high and sell low. It's going to take a while for a lot of these companies to develop their base of shareholders that are into it for a long haul. And that's why I'm going to be patient with this one. I really like the company, right? But I don't want to add a lot more when it's already like my 5th biggest position currently. So let me know if you have questions, right? I hope this helped you. A lot of you often ask me what I have in my portfolio. Well, I have a lot of these stocks in my portfolio. Like the only one that I don't have a big position in is CCIV, right? And there's other companies in my portfolio. There's other companies that I'm looking into that I want to buy, but these are pretty much the ones that I have in my portfolio that I want to add more over time. So I hope this was enlightening a little bit. I hope you enjoyed it. I'll see you guys in the next video. Please don't forget to subscribe.